Bitcoin has one of the best outlooks out of any asset. Gold is, responds to financial markets, and there's a million things that go on that will always provoke a reaction. Bitcoin will always respond to big market moves. Something that I would agree with, it's kind of a decoupling. It's kind of a very new relationship where Bitcoin could certainly function as a safe haven asset. People in that top 10% are very unhappy in America right now with all that's happened. Most people don't care. You just have to have a little bit of a different view on giant sovereign superpowers that tension and competition is the name of the game. If you can find an opportunity to improve your standing and the citizens of your nation, their quality of life, you do it. The only people I've ever heard talk about Triffin's dilemma were Bitcoiners. And now they're effectively talking about it as the highest level of American policy. So that's, it's interesting to see.
Hi, Stephen. How are you doing? Everything fine on your end?
Yeah, it's been, quite a couple weeks, historic, really, living through it. And it's been interesting just seeing the tectonic shifts, in markets and global dynamics and politics. I mean, it's not often you can truly say that you're living through history, but we truly are right now. And honestly, it's given me a lot of thoughts on not just what's happening, but almost like the meta context of how people navigate situations where there is a lot happening or there is uncertainty. And that's been one of the interesting parts for me in all of this is watching people try to model and make sense of something which is both profoundly impactful and also profoundly uncertain. None of us have clear information. So, I mean, that's a whole topic, but that has been one of the most interesting parts to me about the last couple weeks.
Interesting. Yeah, there's a lot going on. It kind of started, if we zoom out, this epoch overall has been completely crazy with we breaking 100K, the ETFs coming into fruition. It was a little bit before we started the epoch. Then strategic Bitcoin reserve, Trump is elected. Now we seemingly have a trade war with China and America going on. What's kind of one of your highlights? What is kind of standing out for you in this times?
One of the things, in many ways, so much that is happening is a profound confirmation for so many of the Bitcoin worldviews, right? Specifically, what I mean is it was only after I got exposed to Bitcoin that I really heard people talking about putting a lot of attention into Triffin's dilemma and the dynamic of the US dollar monetary system and the impacts that this had on America and on the globe, and that this monetary order was a driving force in what I would call the transition of the US economy and the US political economy from the kind of golden era of the 1950s to 1970s to what we're experiencing today. And in America, and I know you're in Europe, but in America, there's a lot of discontent and dissatisfaction on the difference between what the shape of the economy today versus the shape of the economy in the 1950s. And this is something which, unless you really look underneath the surface or you're living here directly experiencing it, it's not immediately visible when you look at top line GDP growth, top line wealth growth, top line equities markets growth, right? There's this one view from the top using all the financial metrics where it's like the US is the richest, best, most successful country in the world. And that is a true statement on those levels, but it has had a hidden underbelly where there's been a huge divergence. People have called it a K-shape economy, where so much of that kind of effectively concentrates in the financial class and the top. And I'm by no means someone that's like, wealth inequality is normal, it's natural, it is innate outflowing of divergences in human capacity and many other factors. There's no world where you don't have it. But there are ways that systems can artificially reinforce it via just purely monetary dynamics. And that's what we've seen. We've seen this K-shaped economy where people whose careers or assets position them in such a way where they benefit from the global monetary standard have done very well. And the costs of that system have been increasingly borne by just normal workers and people who, if you compare the like kind of real quality of life of the normal American worker, can they afford a home? Can they afford a family, college, healthcare? These things are progressively less attainable. They're progressively more expensive relative to their earning capacity. And this is kind of this divergence that when people here are talking about this K-shaped economy, or they're talking about the changes in the US post the 50s to 70s period, really like post the Nixon shock, the gold window closing, like this is what they're highlighting. And that was a roundabout way of saying, this is something Bitcoiners were really vocal and focused on, and was something I had never really encountered until I got into Bitcoin. And so it's fascinating to see this take center stage in this administration. This is very much the language that Trump, that Bessent, that this whole administration, Stephen Moran, are using to say, hey, we want to take a stab at correcting this. And this is something, Bitcoiners have been like, well, it's a Triffin's dilemma problem. It's a US dollar as world reserve currency problem. It's inevitable as long as the dollar serves this very specific role. And so if you had a neutral reserve asset like Bitcoin, as we once did with gold, some of these dynamics would start to reverse. And, it's a fraught conversation with, many details and nuance. But what comes up for me most watching everything that's happening is the astonishing way that a seemingly niche and countercultural concern has taken center stage.
Interesting. I just want to. There's a lot. There's a lot of interesting things in there. First of all, I think many are aware. Many might not be aware. What is the Triffin's dilemma?
Yeah, absolutely. So it's basically the word for kind of an economic problem that a man, I believe Robert Triffin, but his last name was Triffin. He presented it to the U.S. and Congress in like the 60s or 70s. Must have been the 70s because it must have been post-Nixon. And it's basically saying that the issuer of the world reserve currency, right? So if we issue the dollar, and the dollar is like the currency, right? It's used to settle trade. It's used to store value, and or treasury bonds are. It is kind of the primary main currency that so many things are linked to. The only entity that can produce the dollar is the US, right? So 100% of the globe's, every other country's demand for dollars must be supplied by the US because no one else can make them, right? It's pretty simple. So however much dollars Japan wants, China wants, India wants, Europe wants, everyone wants, we have to produce. Well, how do we produce them? We print them. We deficit spend them into existence. And so we must continually issue debt and issue currency to meet the demand of the globe. And so this mandates that we run continual deficits. We're running continual deficits. We are going more and more and more and more into debt. And we're also running trade deficits. People talk about how the US is a twin deficit nation. So we're running monetary deficits, we're running trade deficits. So what Triffin's dilemma is it's saying this dynamic, being this twin deficit nation, has a cost. It has a price that we really can't escape as long as we shoulder the mantle of meeting this global demand for dollars, US dollar assets, US debt. And the cost that we pay is many things, but you can think of it most of all that like the brunt of that, those deficits, right? It's borne by not top tier financiers who can extract rents from global bond flows or who own assets that global capital surpluses get redirected in, right? So what happens is like the dollars go out, the debt goes out, and then a lot of that comes back to buy tech stocks, and a lot of that comes back to buy US dollar denominated assets. So if you either are in the financial industry where you extract basis points from global bond trades and debt issuance and these various things, or you're in the tech industry and you get venture investing, those dollars just come to you to invest in your companies because they're the best performing companies in the world. If you're in one of those two industries, you've done great. Like I've always said, there's two. There's tech and finance, and there's everything else in America. And if you don't work in tech and finance, you're kind of in, there's only really a service sector economy. And this is what I think people don't fully understand is in America, I think especially outside of America, it's just a vast service sector economy, retail, fast food, so many contractors, home repair, consumption, goods, yachts. I mean, that's being obviously, car sales, boat sales, machine, recreational things. It's this vast service sector economy, and those jobs aren't very good. They're really not. And so with Triffin's dilemma, you either position yourself to extract wealth from this dynamic, which tech and finance are positioned in that way, or you effectively you subsidize our satisfying of global demand. So the US is satisfying global demand for dollar and dollar assets. And the price of that is being paid by America's own middle class and citizens. And so there comes a certain point where people start asking, like, why are we sacrificing our kind of core middle base? Why are we making our citizens bear all the burdens of this system to satisfy the globe's demand for this currency and asset? And like that's what's being navigated in America right now that's driving a lot of this. And that doesn't mean that the policies are perfect. I actually think the tariffs were way over calibrated. I think if they stay the way they are, it'll be really bad. Now, there's a whole other conversation of like, were they ever intended to stay that way? Yes, they've said that. No, that might not be true. But it's not saying that the approach has been perhaps the approach I would take, but this is the question.
How is actually the reaction from American citizens and your friends from your environment to those tariffs? I heard for the first time in this administration bigger critical things about what Trump is doing. I think Elon Musk was vocal about that he's actually kind of a proponent for zero tariffs. There was some Bill Ackman. Is it Bill Ackman?
Yes.
I'm not sure, but I think he was also vocal about it. So how do you see how is the reaction from America and what you're seeing to those tariffs and what's going on?
Yeah. Let me answer that question, and then I want to circle back on one other point on the last thing about why this has to do with manufacturing capacity and industrial capacity. I want to come back to that, but so people that own assets in America right now have been pretty unhappy, right? Like the Trump administration has, I think, really pissed off the business class, asset owners. Elon Musk is unhappy because fundamentally he's an entrepreneur. And he understands that these policies will be pretty kind of devastating in their current form. And so, people that own assets are not having a good time. And, not that I'm some like, uber wealthy billionaire or anything, but even my own life, like it's been a hit. And it has a kind of gut. There's a kind of like a gut punch. Like it's harder to handle when you're personally kind of bearing the costs every day. And so it's been difficult, I think, for just anybody that has a material amount of their net worth stored in financial assets, which is pretty much anybody with any financial assets in the US. However, the thing to understand, so many Americans do not own any assets and they do not care. So there is this remarkable dynamic where there's so many Americans, many of them Trump voters, who just do not have money in the stock market. They do not have assets. And so, frankly, they don't really care if the market goes down. Now, this is misguided because in such a financialized economy such as the US, you can't have that like the whole system comes off the wheels if you have a prolonged stock market crash. So there's a very real way that you really can't have it. It'll be disastrous. But the people that don't own assets don't understand that. And I think there's resentment. And I think there's this kind of view that's like, we wanted the system to change. I don't care if the market crashes. I don't have, they're saying that they don't have assets. They don't have opportunities. They've been locked out of upward social mobility for decades. And like, this is what they wanted. And so, I think so many of the people talking about like, oh, the Trump faction is politically screwed because this will be so unpopular. They're really betraying their own class status and their own financial status as like an asset owner, as somebody that probably has, 6, 7+ figures in financial assets whose life is really being impacted by this. And they're assuming that everyone else is like them. The thing is they're not. Very few Americans have large allocations to stocks outside the top 10% of earners. But the confounding thing there is that the spending patterns and the tax payments of the top 10% of earners are incredibly critical to the US functioning. So I think, people in that top 10% are very unhappy in America right now with all that's happened. Most people don't care. And I'd actually really be curious, like you're in Europe, I'm obviously in America. How is this being received? Like, the median person there, what do other people like? What's the average opinion? And then is there anybody outside of that average opinion you've come across?
There's obviously what the mainstream media is saying and what the officials are saying, and then there is what people on the street say. And I think my environment, my subjective small environment, really doesn't care right now. But they're saying like, oh, like he's having a trade war. Like there are people that like Trump, and there are people that don't like Trump. The people that don't like Trump really don't care about the tariffs right now. And the people that don't like him, they are more like, oh, like he's driving down the economy, which is a weird thing to say. Like, how can the US president drive down the European economy? Yes, there's some influence and some connections there, but if he makes tariffs and this is hurting the European economy, then the European economy is not strong enough, in my opinion, because if he puts too many restrictions on America and the trade zone, and European economy would be strong enough, then it would hurt America more than it would hurt Europe. That's just like my layman's terms understanding of it. Then, which is then it's super interesting what the kind of media and the officials are saying. They are trying to not overdo it, so they are not trying to, because I think China really went in and really said like the hammer, like, hey, let's push back. Europe is a little bit more subtle and tries to keep an open ear and an open dialogue, and just make small changes, which I think come in effect tomorrow, which will be already like 1-2 weeks when this podcast will come out. So it will be really fun to see how it shakes up. I personally not that interested right now with tariffs. I mean, I don't have a company that says something like, for example, I heard Apple is really in a really bad spot really because bad. They are manufacturing a lot in China, and it's easy to say like then just make the factories in America, but that's a process.
It's a process. So actually, so thank you for that. Let me respond to that. And that's a great jumping off point for the manufacturing point, which I did want to touch on. So I'm very interested. Like, I've been having a kind of back and forth with my friend who is grew up in South Africa, missionaries from Europe, has lived in China for many years. And he's saying like, oh, people are so unhappy about this. But I also felt like he's exposed to a very specific type of person who is European, traveling to China, doing stuff. Like, it's hard. I would have bet that it's like the average person is more like, they don't really know what to make of this. They're not really like super, super strong opinion. Obviously, there's people that hate everything Trump does, and they're going to just hate Trump, whatever it is. And there's people that like Trump, they're going to like whatever it is. But, it's interesting. And I liked your point of, I think that your point about like the strength of these economies was interesting to me, because like that is part of the leverage here. Is as a deficit nation, that inherently means we are buying more stuff from you than you are buying from us. That's like what a deficit is. Therefore, America on paper has more leverage in this situation because we're a bigger customer of yours. Now, that doesn't mean there aren't many, many other factors. How many treasury bonds you guys hold that you could sell on us? If you can make deals with China, if you can, do these sort of things. And I also agree with you. The EU has really been relatively measured on this. They've done some small things, and they need to save face. And that's going to be natural and all. Trump needs to save face. Everyone needs to save face. No one wants to go back to their voters and be like, yeah, we got our ass kicked. We gave them, we gave them a bunch of our valuable assets. We got nothing in return. Like, it's a terrible look, right? So this will be something everyone's navigating. But yeah, China has been very strong. Like, they have to fight. They're prepared to fight. The question is like, there's a strong argument you can make. They don't have a strong hand here. They're in an economic slowdown already. They have demographic issues. They were already kind of bailing out their markets. They've had to put that into overdrive. So like, we'll put a pin in that. But I think what you see is my bet is still that Japan, Europe, South Korea, these countries come together with the US, negotiate a new sort of trade arrangement, become a team again, and then that collective front can negotiate with China. I do think the US we need Europe and we need Japan to kind of come together, and then as a group, we can go to China. And I'm kind of going on a tangent here, but what is unfortunate about this situation is, in my opinion, this trade reordering is deeply necessary. It's been inevitable. It's been a long time coming. It needs to happen. I think there are ways to do it that are very reasonable for everybody, that benefit, not just America, but its partners. And unfortunately, the like rhetoric from the Lutnick camp and on these tariffs has been just like very confrontational. And so it's set the stage a little weird. Scott Bessent is now the leading negotiator. I was very public on Twitter. The moment you see Lutnick swapped out for Bessent, that's a pivot for the administration. Bessent's going to negotiate and work something out. Lutnick was pissing everybody off. So we're through that already, and I'm hoping they can kind of rein it in. Anyways, that's a bunch of stuff on what you said. But a point that, so you've seen a lot of conversation about industrialization in the US, and Trump has been very vocal that he wants to bring industry back. He wants to bring manufacturing back. And there's been a lot of people kind of making fun of that. And like these jokes about, like Americans don't want to sew socks in a factory. Like what, you're going to take, you do PowerPoint for a job now? Great. Now you're going to screw in screws on an iPhone. And everyone's like, why would we want that? We don't want these factories. These jobs are not great. And I mean, this is a straw man. I mean, this is just a complete bad faith engagement with the topic. And I'm not saying that the administration, particularly Lutnick, has been super clear about this. But one of the Triffin's dilemma dynamics, one of the challenges that America has faced is because the dollar is the strongest, it's going to be the strongest currency in the world. It's in the most demand. More people want dollars than any other currency. That effectively makes the dollar worth more than other currencies, right? Like in a certain sense, which means manufacturing in the US will structurally be more expensive due to currency exchange rates. Like not even taking into account quality of living and wages and all these things, because other countries have to basically take their weaker currency and buy goods that are priced in our stronger currency. Manufacturing is basically non-viable in the US. And that's been bad for middle-class jobs and stable families, birth rate, all these things. And that's one factor. They want to address that. They know that having these jobs strengthens the middle class. But the other factor I think is much more material. And it's a lesson that the Americans learned during COVID. We had to rely on China for life-saving pharmaceutical medications. And if they wouldn't have shipped those to us, Americans would have died in mass. We also had to rely on them for technology. We rely on Taiwan for semiconductors. If China takes Taiwan, we're screwed. We're so screwed, right? We don't build ships anymore. We don't build, we build very little. And so there is a profoundly necessary strategic national security element to this, where we need manufacturing here in case things ever go bad. Otherwise, we're basically just completely surrendering our sovereignty to manufacturing nations who may turn hostile. And so that is like the other element of Triffin's dilemma and something that's being navigated here. And you can look at this in Stephen Moran's comments. And you can see that one of the ways that countries are going to get these tariffs rolled back is they have the option to invest in industrial capacity in the US. So it's basically saying, hey, Taiwan, we'll drop these tariffs against you, and we will we'll provide you with security guarantees. We have the best military in the world. We'll defend you. We'll drop the tariffs. We'll even do more trade with you. But what you need to do is you need to take $100 billion a year, and you need to build Taiwan semiconductor factories in the US. And those need to be here. You can own them, you can operate them, you can derive profits from them, but you're going to hire American workers that'll be trained to do these jobs. And those factories will physically be located in the US so that in a worst case scenario, like a war, we have access to that capacity and a skilled workforce that can operate it. So this is, and I think you see a lot of that. If countries want to invest industrial capacity here, the tariffs get dropped. And that would be a win. If that ends up happening, I would consider that a win. But so that's just kind of one other element that I think is essential to understanding this.
That is super interesting to hear that perspective. And also, I think one aspect, because you mentioned it already, like the asset owners are now kind of saying, oh, it's bad. I've actually not looked at the American stock market that much because I just don't have any stocks. I just have Bitcoin. But I've seen, I just looked it up, some European stocks, and yeah, it's going down like 9, 10, 11%. But at the same time, it's right around that level where it was in the beginning of the year, which was not that. It's like it's not that bad. I think people amplify it a lot. I don't know how the S&P 500 actually looks at it. I didn't even look at. Let's quickly look into that because it is. Let's see, it's 10% down for the month and 13% down for a year to date, and like around 0 for 1 year. So it's obviously not good. Like it lost around 20% in the last like 1.5, 2 months, but it's not that bad. Like if you invest in something, I always feel like you should invest in something long term. And because I only have Bitcoin, I'm very used to the volatility anyways. And this feels like nothing like that. It's like nothing really happened.
So I think that's correct in some ways. Like assets are still up tremendously over 5-year, 3-year, 2-year time horizon, right? So asset owners have done very well, and really it's not so bad. But I think the pushback, this is the fastest 3-day drop in the S&P of all time, period. It is the speed at which it has, almost all of that drop has been in the last week. And so that is what has, I think, really spooked people. And then what has happened yesterday, and this is important for people to watch, and it's important for Bitcoiners. We've talked a lot about kind of these macroeconomic issues, and they play in fundamentally to Bitcoin. We can maybe discuss the tie-in a little bit, but so basically there's a ton of dynamics between different US Treasury instruments. The yield, right? You've heard of yield curve, you've heard of like these things. So there are basically ratios which can signal real dysfunction in the fundamental monetary system, the treasury market and financial plumbing. These are the sort of issues that get the Federal Reserve to come in. These are the sort of issues that get the Fed to QE, money printing, stabilization, right? And so starting like the last 48 hours post the China escalation, so this is both Trump's escalation on China and China's retaliation back. These like the swaps and the interest rate differentials between the short-term US treasuries and the long-term US treasury has just like completely blown out. And if this continues in any capacity, you're in a situation where like the Fed has to step in on the weekend. Now, it may not continue. Maybe it'll stabilize. Maybe it won't. We'll find out. But we're getting in that zone where I think it's somewhat realistic to expect what's been notable is the Fed has been very concerned, even unconcerned, even though we've seen basically a stock market fall that is only rivaled by 2008 and the COVID crash. And yet they've been unwilling to do much, which is interesting in of itself. And people have theories on that. But now we're getting in a zone where things are starting to break. If this continues, things start to break and they need to step in. And so this is obviously something any investor should be watching, but also Bitcoin investors, right? Like when you hit that point that both the Fed and the Trump administration are kind of trying to stabilize things, historically, I mean, that's your buying opportunity or that's your turnaround point. And my honest take is we're getting close to that. There's like a ton of fear. People are, really panicked in markets. And but I really have to think we're very close to the end, and you start to see some resolution here. I would be surprised if we don't see a deal with Japan at the very least within the next week.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have two ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if you're in jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward to seeing you there. Interesting. It's super interesting, this whole thing. It's also when we have Bitcoin, I think maybe that's why I'm more more relaxed around that.
Sure.
Because it's like, long term, money printer will print more money. If the stock market continues to go down, at some point the Fed will step in and say like, hey, like we have to do something. We have to buy things like the same way as they did in the COVID crash. It was fascinating to watch. We had a huge dip and they just printed, I think, what was it, 40% of the whole money supply within 1 year. And we had 40 or 45% uptick from the S&P 500 from the starting of the year to the end of the year, and then the COVID crash was inside there. So from someone that just holds Bitcoin for the long run and isn't intending at all to sell anytime soon anything, because I'm operating on a Bitcoin standard, I'm like, let's see how it goes. I'm just hoping that a trade war is not actually coming to an actual war. That's my only small concern. Is it also something that you're looking at it, or is it just something that they're not trying to poke each other and seeing where they end up, but they will make deals in this year, 2025, maybe 2026?
So I'm very low probabilities this results in like actual war. I think people get really panicked when I'm not saying you are, but like I think, that gets floated around and people get really panicked during these things. And, something they don't understand is like Morgan Stanley and Goldman Sachs will sue each other in court on Monday and then work a deal together on Tuesday. People need to understand that in these levels, like, it's not like individuals where everyone's like personally slighted. There's obviously some human elements there and people can be kind of irrational and emotional, but like, this is what happens between giant superpowers. I mean, China spies on us and steals technology, like we, do aggressive economic moves back to them. Like this just happens, Russia's been in a hot war with Ukraine, and yet, we're still trying to negotiate. And yet, Europe's still buying energy from them. India's buying energy from them. And now we're trying to negotiate an end to this. Like, you just have to have a little bit of a different view on giant sovereign superpowers, that like tension and competition is the name of the game. If you can find an opportunity to improve your standing and the citizens of your nation, their quality of life, you do it. So I think people are they're a little too afraid here. I think the reason they're afraid is like maybe a lot too afraid. It's just that this is unprecedented. This is a total change in the post-World War II monetary and political order. It's a big thing. A lot of people don't trust Trump to navigate that effectively. They think he's unreliable. You could take another stance that it's actually one of his biggest assets in this is his perceived erraticness. And so you get into this really interesting question of, is he actually this erratic, or does he play it up in order to get leverage? And we have quotes from him talking about doing just that. There are numerous quotes from Trump from both the previous administration, books, interviews, where he's like, yeah, I want people to think I'm fucking crazy. That's how he likes to negotiate. But then you have this other question that's like, okay, so maybe X percentage of it is effectively a show. It's effectively putting something on. But what's the remaining Y percent? But how crazy are you actually, right? And maybe that's a small number, maybe that's a big number. It's hard to, you can't really know. So it's something, I had a post this morning that we're in like the Scylla, and we're like sailing between the Scylla and Charybdis of retardation, where to our left is like anti-Trump retardation, to our right is pro-Trump retardation, and it is getting narrower and narrower to pass through this gap where you're not being pulled into like reflexively, either like just thinking one way or the other. These are very, what's going on triggers a lot of responses from people. And it's very challenging in this moment to try to, I think, have a very sober and clear view of what's happening, especially because we're working with very incomplete information. But coming back, I think a lot of it's overblown. I think we start getting deals within the next 7 days, Japan first, then something gets worked out with the EU. And I think this thing starts to get resolved. I think it was this big rupture, and I think it was, I don't think you had to do it exactly like this. I think mistakes were made, but I do think some sort of rupture and restructuring was necessary. And I think we get to a point where this gets navigated. Now, coming to Bitcoin, this is really good for Bitcoin in many ways. Like, you could go down a theory where actually one might expect them to actually like really play into Bitcoin in this kind of restructuring. Like, the monetary order is being renegotiated. Whether that gets done successfully or unsuccessfully, we're going to find out. But it is being renegotiated. And you have an administration that has been very amenable to Bitcoin, and that by virtue of being concerned about the topics they are concerned about, they inherently value a neutral reserve asset. Like, a neutral reserve asset is a large part of the solution to these problems that they're navigating. Trade deals and like investment and reindustrial, like these are other solutions. They need those too. But playing into Bitcoin, which has gotten a lot more airtime than gold, which would be your other option, would make sense here. And I'm somebody, like, let me be really clear. In the Bitcoin space, there's a lot of people that have always been like, you're going to wake up one day and hyper Bitcoinization is going to happen. You're going to wake up and there's going to be like this sudden change. I've always been like pretty skeptical of that. I thought we're really nowhere near there. The world is not ready for that. It's just not going to happen. But for the first time ever, I think you do actually have a real probability where you could see major geopolitical moves that, again, not that the dollar disappears or the US treasuries go away, but you could see Bitcoin or gold or Bitcoin and gold start to play like a real role in the monetary order. And there would be incentives for the administration to do something along those lines. So you, have this really interesting opportunity because of that. B, global tension, trade breakdown, asset insecurity also is quite bullish for Bitcoin. Further, China's response to this whole thing has been devaluing their currency. The last time they devalued their currency, a ton of money flowed into Bitcoin out of China. So once we're through the initial shocks of this process, there's some things that I think are very, very good for Bitcoin, just from the basic events. And then you have this kind of call option upside. You have this chance that, I mean, I'm bullish. I would say the odds that the Trump administration buys additional Bitcoin in this next year are very, very high. I think they do that, and they may use this to leverage as a piece of the new monetary order. So it's a lot to pay attention to, right, for Bitcoin.
In my research, I came across one podcast you did, and I think you called, it was like last year, done so around a year ago, and you called 2024 one of the most significant years in Bitcoin yet. How do you look at 2025 for Bitcoin? I mean, there's actually a lot happening in 2024, so you turned out to be very true on that manner. But what are you expecting for this year?
I think this is going to be a historic year for Bitcoin, and I think you need to look past the price movements recently. It's literally the only thing that has been going on with Bitcoin price is as a reaction to global asset panic, right? It has nothing to do with Bitcoin. In fact, if you told me 2 years ago that the S&P would be down 20% in like 2 weeks and asked me how much Bitcoin would be down, I would have said 50% plus. And it's down, sure, but it has been tame compared to the S&P. And I think like peak to low, something like 30%, 35%. But again, it didn't trade at that peak for very long. That peak was like a moment. I think at the average sort of price, and this was at the end of a big run up and all these catalysts. Like I'm saying the high price is a little inaccurate. It's a little weighted to the high side because of just that was the top of a big multi-month movement with a lot of enthusiasm. You know, I would kind of clock the high as like, you know, 100K, 103K, something like that. It's just mildly off. And then, you know, basically the low has been, you know, upper 70s. We got a little bit lower, but, you know, 25%. The S&P is down 20%. That's never happened in the history. One should be very enthusiastic that even in true panic, Bitcoin is really holding its own. It is no longer trading at a huge kind of leveraged multiple to financial assets. And I think this is because people recognize that in this environment, this is actually a pretty good thing to own. This is actually something that makes sense. And so I think this will be a historic year for Bitcoin. I think, like I said, your probabilities that at some point this year, something happens for Bitcoin that I think totally transforms what it is and its role in global markets, I think it's really pretty high. Whether that's the US buying it and actually leveraging it as part of a new monetary framework, again, even as a small part, like that's not me saying everything's Bitcoin, but even if it's like a small, like a part that's so incredibly material, or just as a result of these geopolitical tensions, markets start to value neutral reserve assets that have no tariff exposure and are not exposed to debt burdens or growth slowdowns or recessions or these sort of things. Like that's possible too. As well as other countries, like maybe they want to hold less dollars. They lose a little bit of faith, or they're a little uncomfortable after everything that happened, and maybe they hold a little bit more Bitcoin. I think all of these would be, game changing in a way that would make the ETFs look minor. It would make them look like a small thing. And I think your odds of something like that happening 2025 are really quite high. I think Bitcoin has one of the best outlooks out of any asset at this time. And, I'm not saying that because I'm a Bitcoiner or I work in the industry. I really believe that. I think it's a sober assessment. And I think there are other people that are saying and realizing that too.
Is that maybe early signs of decoupling from the overall market? So like Bitcoin trades on its own versus it's not correlated to the S&P 500, to tech stocks and the volatility there?
Yeah. So in some ways, like in essence, I agree kind of with what you're saying. I'm going to be a little pedantic here because I think it's important how we talk about this. And it's more in response to other people talking in this way. So nothing is really decoupled from financial markets. Like it's always responding to each other, right? Like whether inversely it goes down so it goes up, or the other way, or it goes down so it goes down. Gold is, responds to financial markets, and there's a million things that go on that will always provoke a reaction. Bitcoin will always respond to big market movements. But the thing that's changing is, I think, this like high risk tech stock beta relationship, right? Where it's like Bitcoin kind of just follows the NASDAQ. And if stocks are doing really good, then it does better. And if stocks crash, then it falls more. That I think is ending. And that's a good thing because it allows a new relationship to form, which I think does lay the groundwork for something that I would agree with is it's kind of a decoupling. Like it's kind of a very new relationship where Bitcoin could certainly function as a safe haven asset and could be something that investors turn to just as part of their portfolio, and honestly, and additionally when they're scared or concerned.
That's a really good point. I never thought about that because you're totally right. Even if the S&P 500 would go down 20% and in the same week Bitcoin is going up 20%, everyone would call it a decoupling, but actually it's still correlated because like money is flowing and those markets are connected. There are people selling stocks to buy Bitcoin. So there is a connection there.
Correct.
So it's more of a, I don't know. I don't know a good other word for that, but you're right. Decoupling is kind of a bad word for that because it almost seems like there's like two different markets, and if there's buyers that literally sell their stocks and buy Bitcoin with their money because they trust Bitcoin more and they don't trust stocks anymore, which happens when the S&P 500 goes down and Bitcoin goes up, there is a coupling going on. But I'm searching a good other word for that. It's just like the correlation, the relationship changes between those, yes. I guess.
Yeah, and 100%. And that's exactly my point is like, they're always going to be coupled. Like these things intimately relate to each other. But I think what people are pointing out is the relationship between the two has changed. That's true. And I think that continues to be true in a very positive direction. I would, very much like Bitcoin to have a new relationship with risk assets and tech stocks than the one it's had in the past. And I think that is unfolding before us.
100%. One thing I remember you also said right in the beginning, this K-shaped economy where we always have inequality. That's natural. but we are amplifying that with fiat, and we're amplifying that a lot. How do you see that changing with Bitcoin? And do you think this only changes if we come to a Bitcoin standard, or is that also changing if we still have fiat currencies and just Bitcoin is a way more dominant asset?
So this is one place where I differ from maybe a lot of Bitcoiners. Is I think the Bitcoin only, no fiat currency scenario, 50 years away, if at all. It's a really long way away. But B, I see a tremendous amount of benefits to fiat plus Bitcoin, that these systems both exist. And I think even in that scenario, I think Bitcoin protects people from the worst abuses of fiat currency. I don't see a super functional pathway where you're going to rip away from all the governments of the world the ability to issue currency without very extreme and tectonic shifts happening that would make the last few weeks look like a blip. But what I do see as very possible and desirable is that Bitcoin can provide an anchor point for global trade, global finance, and people's wealth that allows people to save their value in assets that are not tied to these things, and B, it provides a very transparent thermometer for fiat abuse, meaning the more fiat abuse goes on, the more money you print, the more suppression that is happening, the more people buy Bitcoin, the faster Bitcoin goes up. And so if it goes up too fast, everyone leaves your currency for it. So you kind of need to behave more honestly. Otherwise, people exit. Bitcoin gives investors the right to exit. And so the hegemon and the currency issuer has to behave better, because otherwise people will take their assets and leave. And that is kind of the real benefit I see of Bitcoin in addition to fiat. And this is one of the problems you're seeing right now with, I would say, the Trump administration rhetoric. They're saying Wall Street's been winning for a long time. It's time for Main Street to win. There's elements of that I'm of course fine with, of, yeah, we need to make it better for middle-class Americans at the, and too much of the value has been captured by the financial class. The problem is nobody can save. Nobody can save their money. So if you nuke the stock market, you just crushed everyone's savings. There is a savings problem. And so you can't separate if Wall Street was just this, think of it like a venture capital fund, right? People invest in a venture capital fund to make excess returns. They're thinking, maybe I can make a lot of money doing this. This is like a play. I like to invest. I like these companies. I like these VCs. I'm going to give them 100 grand and maybe they'll turn that into $1 million. I'm taking risk with my capital. If that's what Wall Street was, meaning it's a discretionary risk-taking environment where you put some of your money in stocks to try to make more money, then you could say what they're saying. And you could say, hey, we don't really care about those guys so much. We want to focus on the worker. But if the only way that an American worker can save money over the long run is basically stocks, and we know Bitcoin, but like for the average person, it's stocks. Like stocks are what you do. Your 401k, you're saving, your IRA, you can't make these claims. Like you can't say this because you're actually crushing like the savings of everybody. You need to first give Americans the option to save their work surplus and their wealth in something that you're not going to target, to then wrangle Wall Street. And so I think that's the main issue. But that's also what Bitcoin brings to the world, is a way to save money that, isn't so tied to all of these systems. And I think investors might realize that because everyone has all their money tied up in stocks and equities, and they're realizing that these equities are fundamentally exposed to trade tensions, debt issues, tariffs, import export problems. And then you start to think it's a pretty tough place to save all my wealth. That's kind of a risk that I'm taking. And what if there was another asset that I could save some wealth in that wouldn't be so exposed to these sorts of things? And that's Bitcoin. And I think it'd be very bullish if investors started to see it that way, that actually stocks have a specific set of risks that hasn't been a problem for the last 20 years because of like globalization, but maybe is a risk now, and we need to recalibrate.
That's super interesting, that view. Do you see, I think Larry Lepar has popularized that big print terminology. Do you see something like that happening if the stock market isn't recovering, if the Main Street is kind of the focus and the stock market is kind of going bad and bad for a longer period of time, and there might not come a deal or something like that? Do you think a big print like we had in 2020 with COVID or something like that could actually happen again?
So I haven't read the book, so not a specific endorsement of any claims in there, but yeah, I mean, I think we are running up to a point where you will see monetary interventions and fiscal interventions. I think that's getting, unless something radically changes and quickly, I do think the Fed is going to have to start to act. Probably, I mean, if it continues like it's been going for another week, like probably by the weekend. Even if it doesn't, like I could see it in a couple weeks to a couple months. Things are not in a strong spot. So some sort of intervention, absolutely yes. A massive COVID level intervention, we're not there yet. I think we're not there yet. But I think you're going to see some stuff. And obviously, if this took kind of a very unpleasant path, you could get there. But I think your odds of a Federal Reserve monetary intervention are getting pretty good right now.
Interesting, yeah. One last topic for today is a little bit more personal, but how did Bitcoin change you when Bitcoin came into your life? Did something actually change you? Because I see two types of Bitcoiners, those who actually had a lot of those Bitcoin mentalities and Bitcoin mind shifts already before Bitcoin in there. They might have were like a big fan of gold before or something like that. And those who discovered Bitcoin and something broke in their mind and a lot of other things all of a sudden were questions in their life. How was Bitcoin impacting your life?
Yeah, so I was in that latter camp of was not a gold guy or a libertarian before Bitcoin, and it made me think about a lot of these questions. It made me think, mostly like monetary matters and financial matters was not something that I paid much attention to before. And Bitcoin got me to do that. So, I mean, it did have a big shift on my life and my interests. And, it's kind of what I said at the beginning of this interview, that one of the things that's been so surprising about this last couple weeks is seeing the only people I've ever heard talk about Triffin's dilemma were Bitcoiners. And now, they're effectively talking about it as the highest level of American policy. So that's, it's interesting to see. And yeah, I mean, it made me take that very seriously, and it made me have a real appreciation for how much money impacts life. I think people think about, I want more money, or the problems that having too little money poses, but they rarely think about the qualities of money or how the system of money functions and what it produces. So I think Bitcoin got me thinking about that, and it's been something I've tremendously enjoyed, and has just been a fantastic interest since.
Awesome, that's I see that in a lot of people where if you start questioning something fundamentally like money, you're all of a sudden asking a lot more question in other areas. Like, okay, I was wrong about that thing. What else? What else did I not get? I have one question that I ask each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
So I am very well known on the internet for one to two other things besides Bitcoin, and it is for walking. I walk 10 to 20 miles a day. So I am like a prolific, like really a prolific walker to a very high scale. I'm a very large proponent for that. I think it's can be life changing, and not just on a health level. I think it's all encompassing. You think better, you feel better, everything's better. So I am a big proponent for really walking as much as you can. And there's a lot of other Bitcoiners that have started doing it. Shout out to Mandrick, if you know Mandrick, but he's doing about 20,000 steps a day, which is just shy of, I think, 10 miles a day, and has loved it. But so I'm a big walking guy. I'm also a big sunlight guy. I actually I wrote a small paper on the health impacts of sunlight. And so one of the things I think the modern medical establishment got most wrong was this framing sunlight as like specifically harmful due to skin cancer risks. And I put out a paper, it's on my Twitter account, going through the research that actually getting a lot of sunlight on both your skin, but also via the eyes, visually seeing it. That's why you'll see all my interview and work. I'm out here. So I'm seeing the light. Is one of the single most important variables in human health. It controls all systems from top to bottom. There are circadian regulation impacts on practically everything. One of the reasons I loved walking too is like it gets you outside. So kind of two birds with one stone. But, both sunlight on the skin and sunlight via the eyes. And, basically I would say the research is extremely clear. And if you don't believe me, go download. There's an app called Perplexity. It's an AI app like ChatGPT, and it has it's called Deep Research, and it'll spend 5 minutes searching all the papers, all the scientific publications, and you can ask it a question. It's quite good. And if you don't believe me and you don't want to read my paper, or you think I'm kind of talking my book, go download Perplexity and ask it, does the current research support the idea that getting a lot of sunlight, even moderately high or even slightly excessive levels of sunlight, that the health benefits massively outweigh the health risks? And you can ask it this question, and it'll spend 3 to 5 minutes researching it, and it'll come back and tell you, absolutely yes. Even if you take all of the skin cancer claims at face value, of which there are criticisms, and of which you can actually, one of the interesting things is people who get the most sunlight are more likely to get skin cancer, but much less likely to die from it, like massively less likely. As well as there's different types of skin cancer. People that get very little sunlight are much more likely to get the worst kind. People who get a lot of sunlight are more likely to get the minor kinds, which literally you just get frozen off. But you can ask it this question, it'll tell you, yeah, the health benefits of a lot of sunlight, even slightly excessive amounts, which you don't have to do, massively, massively outweigh the costs. Your mortality risk goes down tremendously, even including the skin cancer stuff. So that's something I'm well known for.
Do you apply sunscreen?
I do not. And I live in Florida, and I got light hair. I'm Fitzpatrick type 2 skin is the technical term, but blue eyes, blonde hair. And I live in South Florida, so I'm in a very high UV environment. I had to adapt over time. So don't burn. Getting a sunburn is bad. Sunburns carry risks. You should go out and you should stop short of burning. But over, many years of living in Florida and practicing these things, I just really don't burn, even in the Florida sun. Maybe in the middle of June if I'm, laying out there or something. There's also a huge difference between just like laying in the sun tanning and just being outside walking. The thing about walking is like you're moving. The light is hitting you from different angles. It's not just like focused on one part of the body. And so that helps it too. It's not, I'm not really talking about like some sort of like lay on the tanning bed and just lay there for hours. But so I don't really need the sunscreen. I don't really burn anymore. But like, you know, if your only option is between a sunburn and sunscreen, yeah, use sunscreen. Like you don't want to burn. You should avoid that. It's uncomfortable and it changes the health profile. So one other thing I kind of mentioned like, hey, you know, like European ancestry, Fitzpatrick type 2 skin. They had a study on Brits, on people from the United Kingdom who moved south. And in this study, they had tens of thousands of participants. They studied life expectancy on, you know, native UK Brits that basically moved as south as Egypt, right? So like they're as south as Egypt. Egypt is obviously not the ancestral environment of the British people, right? They live in a very low sunlight environment. And what they found is as a group, the Brits that moved to Egypt lived quite a bit longer. It was something like, it was really a wild number. It was something like 18 days of life for every like 10 miles south that they moved, which was like huge. It was like, it's in my paper, but it was something absurd like that, for every mile or every 10 miles or 5 miles you went south, it was something like you lived 18 days longer on average. So even for people that have ancestry from northern latitudes, you're still getting a much better health profile going south.
That's awesome. That's really interesting. Yeah, I get sunburned too quick. When I go outside, I usually try to apply sunscreen because I get red a lot, sure, and that I need that. But I love. I'm just curious about one thing when you're walking, because I had a time in my life where I had to walk to a lot of things, and I just walked everywhere without taking the public transport. Yeah. This was an amazing hack. I just skipped when I was walking to work. I was walking to somewhere else. I could have taken like a 20-minute subway or walked 45 minutes. And I always opted in for walking. And I'm usually, when Google Maps tells me, oh, you need 50 minutes, I'm there in 30 minutes when I walk, because I'm actually quite efficient now in walking. And I'm also huge, so I have long legs and stuff like that.
Yeah.
But do you take out extra time just for walking? So are you going outside and saying like, oh, like now 1 hour, I'm just walking around? Or do you plan it within your day of like, oh, I have to go there? And what I'm also curious, do you just walk, or do you also hear like audiobooks, podcasts, or like, do you do something with that?
Yeah. So, I get this question a lot because like, you know, the amount that I walk, like you can only hit it if you're like pretty much walking all day or close to all day. So, you know, I work remote. A lot of my job is calls with clients. I'm the head of private wealth for Swan Bitcoin. So work with clients navigating, you know, Bitcoin investment landscape. So I would say like 60% of my job is just phone calls, right? So I just decide I'm just going to start walking. I don't need to be sitting in a chair taking a phone call. It's just entirely unnecessary. And then, you know, emails, Slack messages, these sort of things, and I can do it all on my phone. So yeah, for a lot of, I mean, I'm working and I'm doing things, or, you know, podcasts, like audiobooks, Twitter. Yeah, it's not some aesthetic pursuit where like, I'm just staring ahead for 8 hours a day. I get a lot of stuff done. I work, I, you know, engage, and I love it. And it's just this view where it's like, hey, I don't need to be doing this inside. I do not need to be doing this in a chair. There's no reason I need to be in a chair to listen to a podcast or, listen to a book or write some emails or, you know, scroll Twitter or whatever it is. Like, there's just no reason. And frankly, I enjoy those things more when I'm walking because I feel better. And it's comprehensive. So it's, got quite a bit to do with that. And, Yeah, it's less like walking places. Even like I'm in America, it's a more kind of car environment, so it's not so easy to walk places. And so it's really just me walking around the vicinity that I live in. It's a nice spot to walk, and it's mostly just that. I don't typically, I'm not like going miles from my house or something, because also I may need to be back at my computer for certain things, and like this podcast. But it's just something I just worked in on like a basic level of just like, I want to walk more as part of my life.
That's super interesting. Do you still do other, sorry for so many questions around your workout, but I'm super interested in that. Do you still do other workouts like, I don't know, weightlifting, calisthenics?
Absolutely. No, I'm in the gym 4 days a week for weight training. So that's also kind of a big thing that I love. Love weightlifting. Done that for a while. Been, pretty dedicated pursuit. So, something that, I'm kind of running, you know, bulking and cutting cycles, the whole thing, and really kind of putting time and energy into that. So I love that too. And I've also, some people say, well, hey, I want to exercise. Well, I'd rather exercise than walk. Here's the problem. Let's say you go to the gym every day for an hour, you do hardcore weightlifting. You're probably not doing that because you probably shouldn't do that because you need some rest days. But let's even say you did that. What are you doing for the other 11 hours? You're sitting in a chair. You haven't solved the problem. Exercise is different than movement. The walking solves your movement problem. You need to move more. You can't be in a chair for 10 hours a day. And even if you go to the gym every day, if you're just sitting apart from that, you still have an issue. So like love love weightlifting or sports or whatever people are into. I definitely do that. I have a pretty structured schedule with that myself. Like, I'm training to failure 4 times a week. But you just still need to move. It's not a substitute.
I guess it's hard for some people, which might have to be on the computer for, let's say, 8-9 hours a day. I mean, I'm kind of one of those people, but it's something I'm aware of. Yeah, that's super interesting. Like moving around is really cool. So I kind of got sidetracked here.
Oh, please.
Yeah, we have an routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is, and it's a totally different topic again. The question from previous guest for you is, which country will adopt a Bitcoin standard first?
Define Bitcoin standard. What do we mean?
That's an interesting one. So I know, because the question is from a previous guest, so I can only guess what he meant. But he specifically said that what El Salvador is doing is not a Bitcoin standard. It's too bearish for Bitcoin standard. So I guess he meant on the way of having Bitcoin as the dominant reserve currency of the nation relies on Bitcoin more than on any other asset.
Yeah, that's a tough one. I think we're far from that, so it's hard to really know what the landscape's going to be like. I mean, countries like El Salvador are probably a decent bet that effectively don't have their own currency, right? So it might be kind of a cheap kind of answer, but something like El Salvador probably makes sense. The reason for saying that is just they already don't print their own currency. They were dollarized. And so for someone to go like full in, I think it would have to be one of those guys. So maybe like, the US starts to do Bitcoin things. Bitcoin becomes like a meaningful reserve asset in global finance. And I mean, one of those dollarized countries, it's just a broad one. Like, it's not like who buys Bitcoin next. It's, something we haven't even seen yet if El Salvador doesn't count.
Yeah, it's definitely a difficult question because it's I think also quite people really overestimate how quick this is going to be. Thank you so much, Stephen, for being on the show. Before I let you go, where can people find you, ask you questions, and reach out to you?
Yeah, so I'm on Twitter, on x.com all the time. My DMs are open. You can reach me there. just Stephen Lubka, just search my name, I'll come up. Also the head of private wealth for Swan Bitcoin. So, you can, reach out, go to the Swan private website, swan.com, click private. If you're interested in talking or being a client, if you're interested in being a client of mine specifically, reach out on Twitter, and we'll connect directly. But it's been a pleasure. Pleasure coming on.
Really cool. Thank you so much, Stephen, for your time. Also, thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.